Hello traders, it's 16th of May and I invite you to a small short analysis of your interesting, in my opinion, instruments. Euro, Pound, Aussie, New Zealand dollar, Swiss franc against USD. Yesterday we had very important data from United States. We had the inflation report which showed us that the inflation in United States is falling. Looking at the figures from yesterday, we can see that the core inflation last month it was 3.8%, expected 3.6, and this is the actual. So it shows us that the tendency in inflation is falling, which automatically made the dollar weaker. Why? Because there's the expectations that Fed could cut the interest rates. It's more possible that they will do it faster than before market expected. Market thought that it will be maybe end of the year. Now the expectations for cut rates are closer. Maybe it will be in the beginning of autumn. We also saw that the bond yields started falling. This was the moment of the CPR report. The bond yields at the moment are at level 4.34, which is much lower than it was at the end of April, beginning of May. Is also a sign for a dollar to get weaker. Okay, so now let's take a look at the instruments, and the first instrument which I find interesting is euro with dollar. We see that there was an inside bar pattern from which price broke out today, and probably they will continue the breakout. Why I expect continuation of the breakout is that we see a change on the MACD. MACD works well when it's strongly extended and then comes the change. So those moments when MACD is rather flat, those are not good signals. But when I see MACD so strongly extended, it's the highest level in last months. The first red bar signals usually a correction, and the second bar is just a continuation of the correction. So I expect more declines here, and probably this could be the target. I'm rather scalping than planning something long term, because tomorrow we have Friday, end of the week. I don't like to keep trades over the week. That's why I hope to close this trade. If not today, then maybe tomorrow. Second pair which I feel is worth trading is pound with dollar. As we see after yesterday's CPI report, when dollar got weaker, pound got stronger. They at the moment the price is on a supply zone. Supply zones usually work like a kind of a resistance, at least for some period. We saw what happened last time from this supply zone. We had a huge move down. I expect also a move down, maybe not a big one, but at least 20 pips, maybe 15. It's also a scalp. Why? We see just that the MACD is just turning around, and the level on which the MACD is now was not seen for a long time. The higher the MACD is, and when the change comes, the more probable is the trade. There's no divergence, but such extended MACD encourages me to open a sell order, which, as you see, I have already opened. Another interesting pair will be Aussie with USD. Also here we see the prices on a supply zone, and this is a typical bearish engulfing pattern. If I remove for a moment the supply zone, you can see it very clearly. Market is just trying to break out from this pattern. It still didn't break out, but it's on the way. And what's interesting in this structure is that we have here a divergence. On pound, on euro, there were no divergences. There was only the MACD turning around, but here we have a divergence. When you look at this maximum here and maximum, those are showing different direction. We have a lower maximum and MACD, which shows us that this is the direction in which MACD is moving, and in the same time we have bullish situation on the charts like this. So this is a typical bearish divergence, which means that it's a good chance for a short. Well, how far will it go? Hard to say. We have a specific situation on the Aussie, because not only that we have a breakout from a bearish engulfing pattern, but we also have an inverted head and shoulders pattern here. And this makes this trade a bit difficult. Why? Because if we say that this is an inverted head and shoulders pattern, maybe I will draw it for you just as a proof. This is the neckline of this head and shoulders pattern, and those are the shoulders. When we see an inverted head and shoulders pattern, we usually expect the market to make a this is a trend reversal, okay? But the problem is that the neckline wasn't still tested. So the minimum what I expect for this market to do is at least test this neckline here. But it often happens that the neckline is, even it's broken, market likes to make a reversal, deeper reversal, maybe up to here. This divergence here, as long as it exists, so long it might be a sell opportunity. And look, that's just the beginning of the divergence. It's only the second bar of divergence, which usually gives us an early entry. So maybe we'll see more bearish bars here and the market will go lower. It's a big question, but I think that this is at least the area to which the market might try to go. On New Zealand dollar, also similar situation to the Aussie. We have an inverted head and shoulders. We have the neckline here, shoulder, head, shoulder, shoulder here, and also an interesting pattern. We have an inside bar pattern here. This inside bar pattern is also not broken. It means that the price is still in the range of this pattern. But look what's happening here. If MACD stays bearish, and we have at the moment 1 hour and 50 minutes to go, if this candle stays, if the bar stays bearish, we'll see a chance for more declines. Here in this case, the declines could go deeper. It could be about 60 pips if they want to test this inverse head and shoulders pattern. And another interesting instrument is dollar with Swiss franc. This is weekly chart, so this is something for a longer term, not for maybe today, but for maybe for a few weeks. We have a supply zone, and on this supply zone we have a bearish engulfing pattern. This bearish engulfing pattern might be a beginning of a deeper correction, this bearish candle. Market is in the range, so there's still no breakout, but there are some signs on MACD that they might start turning around, which means that MACD will stop growing and start falling. When I check the former situations when MACD was so regular, no change on the way from the early January until now, non-stop we had bullish MACD, and then comes the change. It usually gives at least 1 or 2 weeks or even more of declines. And if we take a look at the situation here, look, also MACD was regularly growing and then started falling. And if we would take a look at this candle changed the MACD to bearish, and from that moment on we had another 6 weeks of declines, which gave together about 250 pips. Hard to say how much will it give here, but I think that at least this demand zone might be the target, so it would be about 150. So I believe that if this week, because we have Thursday, we have still 1.5 days to go, if this week will close on bearish, we can expect more bearishness next week, so another maybe 100-150 pips lower. So this could be also interesting setup, but maybe for coming days. And another interesting instrument which I found also good for a setup. This is the situation from today, but I don't know if you remember when I posted this chart on the 8th of May on the Telegram channel. This was the situation then, and I said that this divergence, this bearish divergence, might give us some a good setup, and my target was this this demand zone is 10880, and I open a sell order. And now when we go to the charts, we can see that market was very close to the target. I think that it's not the end of the declines. After maybe a small correction, testing this pattern, we'll see more declines. The divergence is still on. So from the moment when I posted the trade, it was a week ago, market made a move of 80 pips, and I think that it's not the end. Looking at the 4-hour chart, we see that they are trying to return back to the interior of this pattern, but this bearish engulfing candle encourages me to say this could be another move, another leg down, about 40 pips. What is this pattern, by the way? The pattern is, of course, weekly chart, and on weekly chart we see market made a bearish engulfing pattern. Now they broke out from the pattern. If until end of tomorrow, Friday, this weekly candle will stay bearish, this will be just only a proof that they're gonna go lower. So that's all for today. If you find it interesting, just give me a hint that you liked it, and see you next week, guys.